Hi guys, just something else I wanted to share with you, another quick video. This is a template I'm going to share that I found to be quite effective. As usual, I try and make my strategies very user friendly and good for beginner traders. I don't like to overcomplicate trading when it comes to binary options. So I'll just show you what this strategy and template involves. First of all, the indicators I've got on the chart. I have this trend magic indicator, which basically, if price is below, we're in downtrend. If price is above, we're in an uptrend. And if price is breaking, if it's at a straight angle and price is breaking it, we're basically in a period of consolidation. Now, the other indicator I have is a three period exponential moving average, and I also have pivot points on this chart to show potential support and resistance. And the main indicator is this consecutive bulls and bears indicator I have on. First of all, I'd like to say none of these indicators are mine. These are all ones I've sourced free on the internet. I've spent a lot of time seeing which ones go together well and complement each other. The way this one works, I'll open it up. It's consecutive bulls and bears. 1 second. Basically, it shows consecutive candle types of the same type in a row. It's pretty simple. So every time there's an arrow, I have this set to 3 and 3. If there's 3 bullish candles in a row, an arrow will appear. If there's 3 or more bearish candles in a row, an arrow will appear. So as you see here, 3 candles appeared here. There's another arrow. Another one appeared. Another arrow comes. So it's basically showing consecutive candles of the same type. And the reason we have this on this template is to show momentum. If you have candles of the same type consecutively, it shows that there's basically some strength in that type, in that direction rather, sorry. So 3 bearish candles will mean that the bears are in control. There's bearish momentum. So the way the strategy works is we wait for one of these arrows, and then the next candle we look for is a candle of the opposite type. So say in this case a bullish, say we saw an arrow on a bearish move. Let me find an example. So here we have an arrow on a bearish move. There's been 3 bearish candles here. We're going to look for a bullish candle, a decent sized bullish candle like this, to come up and sit or break this moving average, 3 period moving average. We are then going to take the next candle in the same direction as the consecutive candle arrow. Basically what this looks for is high momentum moves, a momentary pullback that finds support or resistance at the moving average, and then the move continues. So here we'd have this is a valid trade, and I'll run through why again. We have a high momentum bearish move, which these arrows indicate, 3 consecutive candles. We have a big candle. We would rather call it an unsustainable move, because obviously there's bearish momentum. It retraces back up to the moving average here, and there's a high probability that the next candle will continue this momentum. It can't. It's like if you're running at full speed and you suddenly stop. The inertia, the momentum, will make you move forward still, if you know what I mean. It's basically the same with this. You've got to think of it in terms of physics sometimes, a bit like that. Here is an example of a trade that you may take but you shouldn't take. Here we have 3 consecutive candles, but this candle didn't quite sit on the moving average and didn't quite break it. See, the next one did, and the trend continued. We're for a higher win rate. We're not. I wouldn't suggest trading 2 candles like this. We want one unsustainable candle moving, and there is plenty of opportunities like this. So basically, if price is trending below the trend magic indicator, we're only going to be taking puts. If it's above, we're only going to be taking calls. If price is breaking the line like this, we're in consolidation and we won't trade. I have the Australian dollar versus the US dollar open. This worked well for that. Other currencies I suggest are Euro USD, GBP USD, and NZD USD. So I'll look for another example. Here we have another example. 3 consecutive candles. An unsustainable candle retraces, breaks the EMA. We take the next candle down. This is 5-minute expiry, by the way. Here we have one, but price was below the trend magic indicator, so we'd only be looking to take puts rather than calls. Here we have another one. 3 candles down. An unsustainable candle comes up, breaks the 3 EMA. We take the next put. Now, with the pivot points, you're going to watch out. They're potential roadblocks. They serve as support and resistance. So if price is coming up to that, you might want to keep in mind that it might alter the outcome. In this case, it wouldn't have done because it wasn't a valid signal at it, because this candle didn't sit or cross the EMA at its close. Here it didn't either. You can see the next candle did. This, you could take this, I suppose, if you experiment around. If you back test, 2 candles may be still a valid option. I personally prefer lower trades, higher win rate, so I'd go with the 1 candle, sort of the perfect conditions. But if you see there's 3 trades in a row all in the money, and using my money management, that can make you a lot of money. We'll just look at the day before. Obviously this works better in a trending market, but the rules still apply in any market. So we'll look here for price above, so we'll be taking calls. Here we have one. 3 consecutive bullish candles. An unsustainable candle comes down, breaks the EMA. We take the next call here. This didn't come here. If you were doing the non-conservative approach, you could have traded on this, I suppose, but for example's sake, we are not. Here we have another one. Excuse me, I put the arrow in the wrong place. We trade on this. Price was basically consolidating. It was in a range all day. Not ideal conditions, but as you can see, there's still mostly winning trades. Here we have another one. Oh, there's 2 more actually. Price comes up. Unsustainable candle breaks the EMA. We go up there, and again here breaks the EMA and up. So if we see there's 7 trades all in the money, all in a row, and using my money management, that can turn over a lot of money. So I'll put the template and indicators in the description, and I'll also There's also my broker suggestions there. I do earn a commission every time you sign up, but this helps me make these videos and share the stuff I'm learning to help you guys. So that's about it for this video, keeping it quite short. Let me know in the comments what you think and if it's helped you at all. It's a very effective strategy, and I hope it helps. Thanks for watching.